Well, welcome. Welcome to this week's edition of the Construction CPA's Coffee Cafe. I'm the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is we are going to be talking about essential business tax deductions. And these are going to be the deductions that every business owner should know. So, what are we going to be talking about? Now, remember, we talked about deductions and tax credits last week, but what are deductions? Deductions are simply going to be a way for you to lower your taxable income. Your credit is literally going to be a dollar for dollar credit against the tax that you have incurred, right? So two different things, and we're only going to be talking about deductions today. So most cases, many people are paying more for their taxes than they need to. So again, if you simply know just a handful of additional deductions or things maybe you weren't aware of, maybe we can help you save some additional money. So business owners miss out on tax deductions every year. We tend to see it, especially with owners who decide that they want to do their returns the first couple of years that they're in business. Again, it's usually helpful to work with a tax professional, someone, whether it be someone like us, the CPA, or even an enrolled agent. They can help you kind of hone in on the things that you credits and deductions. But again, deductions are what we're talking about today, the things that you might be missing, and again, help you to save some money. And that's really what this is all about. We want you to save as much tax money as possible, as well as paying your own fair share. So why does this matter? Again, we're all going to end up paying tax at year end. But as I mentioned, deductions are simply going to reduce your taxable income, and that will ultimately lower the total tax that you're going to pay. So like anything else, what you don't know, especially in business, in many cases could potentially cost you money. So we don't want to see you lose any more of your money to tax. Let's put a couple more dollars in your pocket. So let's make sure that you're aware of some of these tax deductions. And in construction, as well as the trades, there tend to be some unique additional deductions that you might be potentially eligible for. And so again, we just want to make sure that you're aware of the options that are out there for you, and then take advantage of anything that may or may not be industry specific to get you to save some additional tax dollars. So let's talk about some of the common ones. So these are the ones that people may already know about, or you might not. So here we go. So let's talk about, so we're going to talk about vehicle expense, home office deduction. We're going to talk about supplies and equipment, and then travel and meals. So let's start with your vehicle expense. So you can do one of two things when it comes to deductions. You can either take the standard mileage deduction, or you can take actual expenses, right? The actual cost it takes to maintain your vehicle, put gas in your vehicle, you depreciate your vehicle, etc. When it comes to vehicle expense, when you purchase the vehicle and you put it into service in your business, you have to choose which one you're going to do, whether you're going to do mileage or you're going to do actual cost. Once you choose that option, you are basically stuck with that option until you get rid of that vehicle. So things to think about, especially the type of business that you have. For certain types of businesses, mileage may in fact be a better option. If you are driving so many miles in these vehicles, again, it really has to be weighing which one works better for you in your business. What we tend to see in construction is we tend to see the actual cost. Again, the actual cost, why? Because the vehicles are so expensive, the equipment is so expensive. So we're depreciating that. The maintenance for some of these vehicles, especially these larger trucks, these larger specialty trucks, they are going to be expensive to maintain. It's going to be expensive to put gas in them. So in most cases, we find, and again, this is not an end all be all, but we do find that it tends to be a better option to go the route of actual expense in construction and the trades. But again, you want to choose which one makes sense. If you're driving 50, 60, 70,000 miles a year in a vehicle, of course, it probably isn't going to be lasting that long, but which one really is a better benefit for you? You want to make sure you get the larger deduction. So those are one of the things that you want to think about when you are choosing your vehicle. Do we want to go with mileage, the actual miles we drove, or do we want to go with the actual costs incurred in order to keep that vehicle in service in your business? Next is going to be your home office deduction. So I want to preface this with not every type of business is eligible to take this. And this is unfortunately something that kind of got lost with a lot with the itemized deductions and the standard deduction that got increased a number of years back. But if you are running a sole proprietorship, if you are running as a partnership, and so you're a partner in a partnership, you may be eligible to take the portion of your home that you use exclusively for your business as a deduction against your business expenses. Now, keep in mind, this can be, I've seen this one go through audit. So be careful when you are taking this one. We don't want to be taking too large of a portion, but you want to make sure that you are reflecting in this deduction the business use of your home. So for example, if you are working out of a home office, you are operating your business out of this home office, you can take whatever percentage of your home and your home expenses in order to maintain your home as a deduction in your business. It can be a cumbersome one to take in the sense it does take a lot of calculating and aggregating expenses together because you're aggregating all of your home, the utilities, your gas, your electric, whatever it is that your propane, anything like that you're using in your home, any other kinds of utilities, telephone, etc. You're using all of those expenses in order to create what will ultimately be that deduction that you're taking for your home office. So that can be, for some people, it's a lot of work to aggregate all of that information together. In many cases, going the simplified calculation is a lot easier, i.e. simplified, right? You're just taking the square footage of that office space and calculating against a specific dollar amount that's been given to you. In many cases, if you run the two numbers together, they're probably going to be pretty close. A lot of times we tend to go with the simplified for our clients just because it is so cumbersome. And in many cases, it's very little difference from one deduction number to the other. So again, it is an expense that is available to you. Now, if you are an S Corp or your C Corp and you are running your business out of your home, the deduction tends to look a little different. So it's not this home office deduction that we talk about in many cases where it is a specific form on your return. What I want to say is that if you are a Schedule C or a partnership, so you're getting that K1 as a partner, you're eligible for that particular deduction. It becomes a lot harder and it becomes a different deduction if you have a different type of entity, but you could potentially be. So these are the questions you want to pose to that tax professional that you're working with. Can I take a deduction for a portion of the part of my home that I'm using in my business? And that's where you have that conversation with the person who's handling your taxes, whether that be your CPA or your EA. They can answer that question for you. But again, it's an additional deduction you can take against your taxable income in your business. Another thing to think about, supplies and equipment. We see this is a big dollar amount in many construction businesses. You're buying a lot of tools, you're buying some expensive tools, you're buying some inexpensive tools. You're buying some of the tools over and over again because those are the ones that tend to get lost. So again, you can take that as a deduction against your revenue or the income that you earn in your business, right? You're going to have your office supplies like any other business. We're seeing more in construction. People are using softwares. So again, there's more expense associated with maintaining these softwares. So these are all things that you can take against the income in your business. And then the last, or not necessarily the last when it comes to supplies and equipment, but are you in the type of industry or the part of the construction industry where you and your team are wearing specific types of protective gear? Those are all deductions for you in your business, right? Those are all expenses that you're incurring for earning that revenue in your business. So those are all deductions that you can take. You can also take travel and meals. Now, again, it has to be business-related travel. It has to be client meals. You've got to have documentation of the client or the customer that you spoke with, or if you were working on some sort of partnership of some kind, maybe with another entity, you're going to come together and work together on a project, right? And so you're building out that relationship. Those are the types of meals that you can take. You have to make sure you maintain on your receipts the documentation as to who you were having dinner with, right? Those are important. Again, I've seen that particular item, travel, not necessarily travel, but meals. Meals be one of those items that will get pulled apart in an audit. They may not be looking specifically at that in your business, but that tends to be one they go after all the time. It tends to be a really easy one because people do not maintain proper documentation when it comes to their meals and expenses. So a lot of times really very easily gets disallowed. So you want to make sure you keep track of your receipts, you keep track of who you had dinner with. And that is all part of maintaining your documentation. Now, again, you're only going to get 50% of the meals when it comes to client related meals. But again, if you've taken the 50% and you go through an audit, they get disallowed, you're losing out on that. So we don't want to see you lose out on that. You want to make sure that you maintain proper documentation when it comes to something like the meals, right? Because this is an easy one that they can pill apart and you can very easily get disallowed because you just don't have proper documentation. And again, it's got to be business related travel. You're going to a conference. You're going to meet a potential partner that you're going to potentially partner with in business, right? These are all business related travel expenses. These are things that you can take again against your business income. And again, these are very common. Most people know these specific ones, but you want to make sure, again, you keeping proper documentation of all of these things. We don't want to see you get something like some basic everyday common deductions that are available to you get disallowed in an audit because you just don't have proper documentation. So again, super important to have proper documentation and keeping good records and keeping all your receipts where you can actually grab them and be able to prove those expenses. So what else is available to you in construction? So construction is again a specialty type of industry. There might be things that are available to you in this industry that might not be to someone else. So again, what are some of the things that you're taking deductions for? As I mentioned previously, tools, any kind of specialty machinery, right? You might be expensing it depending on how long you have it, depending on how long you're going to use it. You might be capitalizing it and getting depreciation on it. So again, that's another deduction that you're getting as well. So your tools, your machinery, that heavy equipment, safety equipment, those are all things that are special to construction. Specialty clothing that you have to wear, protective gear, depending on the type of construction that you're working in. Are you working in heavy commercial? Is there specific safety around, are you going up into high places where you have to have specific type of safety gear to cover your face, your eyes, etc., right? These are all expenses that are common expenses that can be taken in construction businesses. Are you spending money on utilities at the job sites that you're working on? Are you renting a temporary office trailer, right? You might be on site at a location for a period. So all of those expenses that you incur in order to maintain that temporary office, all the electricity going into that office, the internet so that you can access all of your softwares and your equipment in that office. Those are all things that you can take as deductions. Even though it is a temporary office, all of the items that you're using in there, that's where you're operating your business out of when you are on site. So again, those are the types of deductions you want to make sure that you take advantage of because they are ordinary and necessary in the act of earning the income ultimately on that job site. So what are some of the other things that special that can be special to construction? You might have continuing education of some kind, right? So do you have a license? Do you have an electric license, a plumbing license, any kind of licensing that's going to require you to have continuing education? Are you taking continuing education courses in order to learn new technologies, new types of building materials that might be, out there for you to utilize in your construction business? So those are all types of things that you can take deductions for, that specialized education that you are earning in order to earn more income or maintain the income that you have been earning because you have to maintain a specialty license. Do you have trade certifications that you're looking to maintain? Again, are there certifications in special ways to build or use special types of building technologies, right? Those are all things that you can take as tax deductions. Are you in the union, right? So are you paying union dues? Union dues are ordinary and necessary expenses for the construction trades and construction companies that are utilizing employees and contractors that are in in the union. So those are all expenses that you can take, which tends to be, excuse me, specific to construction and the trades. Are you taking a deduction for your specialized software? Many of you are using job costing softwares now. So, what are the for managing your projects, your job costing? Maybe you're estimating, maybe it's all in one, maybe you have 2 or 3 different ones. What are the products that you're using in order to advance your, your day to day and earn that income that you are earning in your construction businesses? So these are all, they tend to be pretty industry specific. Again, not everybody is going to be using safety gear in their business, those types of things. So these tend to be a little bit more specific to construction. But again, tools, machinery, safety equipment, utilities on the job site, your temporary office on the job site, your continuing ed, your trade certifications. Are you paying union dues? Are you using specialized construction type of softwares? These are all common deductions that you can use in your construction business to reduce your taxable income from that business. So let's talk a little bit about tracking your expenses, because you want to make sure you can maximize your tax deductions. So like anything else, keep your receipts organized. There are tons of digital apps out there now that make it a lot easier. We use a couple of different ones here. I highly recommend that you find the one that works best for you, and keep those receipts in an electronic format. Again, if you choose to keep paper receipts, just keep in mind over time, paper does tend to degrade. So you want to make sure that, for example, if the ink on that receipt has degraded over time, you've captured it in another way so that you have the ability to prove that expense down the road if you needed to, because that receipt is still, again, is a good business tax deduction. You just want to make sure you can actually read the receipt. That's the reason why we typically make the recommendation to go the route of the digital apps. Again, it doesn't have to be a digital app. You could just be saving, screen grabs, pictures, etc. Maybe, in a drive somewhere. But again, make it so that you can very easily find it. So keep it organized. It's a lot easier to find that way. You want to make sure, like anything else, when you are tracking these things, you want to separate your personal from your business, right? You want to keep them separate, especially when it comes to doing something like travel and meals. These are things that can sometimes get intertwined with your personal. So you want to make sure you have a very clear delineation between, personal travel expenses and then your business travel expenses, because you want to make sure at the end of the day, you can prove those deductions if you were ever need to do so. Use your accounting software, whatever it is, to categorize your expenses and do it correctly. In many cases, a lot of the accounting softwares can help you to capture the receipts as well. So there in your accounting software is the list of your expense, and then attached to that is your receipt. So that can help you also with keeping your receipts in an organized fashion. And then also, review everything on a monthly basis. Take your month end and organize your receipts. Make sure your expenses are categorized properly. You don't want to wait to do this at year end. Unfortunately, people tend to do that. And at that point, receipts are missing. We've forgotten exactly what it is that we purchased or what we were doing with this one type of thing or what we were doing or where we were going. So you want to make sure, let's just take the end of the month to aggregate everything together, organize it, file it however you choose to file it, whether it be a paper file cabinet or in some sort of electronic fashion. And that way, when you get to year end, all you're doing is basically re-reviewing back throughout the year, and you're not actually trying to recreate things. So that's where it gets very confusing. And honestly, that's where we find that clients have missed out on potential business deductions because they just have lost a receipt or they have forgotten what exactly they were doing at that point, and it just doesn't get captured. So what can you do right now? Like, what are some of the things that I hope that you can take away from this is, so tip 1, keep a mileage log, especially if you are tracking and using the mileage deduction instead of taking actual expenses. Why? Because you know what? Those short trips start to add up really fast. And at the end of the day, again, mileage is another one of those areas that unfortunately, if you don't have a good mileage log, if you were to be audited, that is an area that is really hard. You've got to be able to prove that. Something they can very easily disallow if you do not have a good mileage log. So keep a good mileage log, and then you will also start to see possibly that those short trips may actually aggregate into a large number of trips. So it will also help you to determine when you are, taking on your next vehicle, whether you should take mileage or whether you should take actual expenses. Tip 2, dedicate a space in your business, in your home just for your business, because it has to be a dedicated space for your business. It can't be, the corner of the kids' playroom where you work out of. And again, that's another one that's very easily can be very easily disallowed, because you just can't prove that that place is where, the kids are doing their homework at the same time you're working in your business. So again, you've got to make sure you've got to have a space that's clearly delineated for working in your business. Number 3, I always recommend to digitize your receipts and categorize them on a monthly basis so that you are audit ready if you had to be. Now, we don't want anybody to go through an audit, but I also don't want to see anybody trying to dig up and find all of those receipts that they don't have or they can't seem to find anymore in order to go through an audit. Fortunately, when you really aren't able to prove a lot of those things, they do tend to disallow them. And it does get very expensive when you aren't able to present those receipts. So again, find the best way to do it for you, whether it be a digital app or you just save everything in a digital folder somewhere on your computer. You just want to make sure that you can easily grab those receipts should you need to prove them in an audit. And the 4th thing is construction and the trades have very specific deductions that might be available to them. So work with your CPA or your EA to make sure that you are capturing all of the expenses and deductions that you possibly can that might be industry specific, that might be outside of the common ones that everyone tends to know and tends to utilize in their business. Again, construction can be a specific type of industry. So we just want to make sure that if there's something industry specific, you're able to capture it and take advantage of it, because again, we want you to save as much in taxes. We want to have you put more money in your pocket to do the things that you want to be able to do. So deductions, last thing, right? This is our recap for today. Deductions are going to lower your taxable income, but you've got to be able to, you have to track them, and only if you can track them, right? So if you haven't tracked them, you're not going to remember that you had this deduction here, and then those are the things that you forget to take. So again, make sure you're keeping proper documentation and keeping everything in your accounting system so you have accurate records of those things. Make sure you start organizing your receipts today. Don't wait until January, February to start to organize your receipts. Start to put them together in a way that you're going to be able to find your way through them when you get to tax time, so that you can aggregate them and put them together in whichever way that you need to, or at least have them stored away in a place that if you were to need them down the road, you can very easily grab them. So don't wait till tax season to do that, which sadly, before you know it, always seems to be right around the corner every single year. So hopefully we will see you here next week. Next week's session, what are we going to be talking about? We're going to be talking about strategies to cut your tax bill, right? What are some smart tax moves that you can make as a business owner? As I said, we always want to save you as much tax dollars as possible. So if you have any, major tax questions, or you have any tax deduction questions, please drop them in the chat below. We'd love to hear from you. As always, we look forward to seeing you here every week. Follow us here on Facebook. We are on Facebook, Instagram, and YouTube. We are at the Construction CPA on all. I look forward to seeing you here every week, and we'll see you next week.